And everybody, welcome. My name's Nick Burns. I'm one of the branch managers at Fidelity Direct Mortgage. We've been partnering with Debbie to do some of these 30-minute real estate blitz seminars, which is going to give you a lot of information. It's not all the information. We're trying to do it as quickly as possible, get some key points out to you, tell you about some of our programs, and also make it quick. And if you have any questions, please feel free to put them in the chat box and we can answer them at the end. So Debbie, when we're talking about issues with buying a house or concerns with buying a house, what are those concerns?
Well, the most frequent concern right now at this minute is the interest rates going up, of course. And so we have to discuss with them the program about buying down the interest rate and hopefully getting the seller to contribute to that. So that's the most current concern. The prices luckily are stabilizing and going down. So that's the good part. The interest rate is going up, but then that kind of offsets each other. So we have solutions to these things. Let me go over the frequently asked questions that we have over the years. Why should I buy a home instead of renting? Well, we're going to go through that. And the biggest reason is because we want you to become a homeowner so you can start establishing and creating generational wealth for your family. And you have freedom when you own a home instead of renting. Who should buy a home? Well, everybody should buy a home. They should buy it whenever they're ready. Yes. Who can help me? Well, that's easy. Nick and I can help you, and we would be honored to help you. What do I need to do first to buy a home? Really, the first thing you need to do is get pre-approved with a lender, and that would be Nick. He's great. He knows all the grant programs. He knows all the tricks, and he's very patient. But, you know, just like any other lender, you might get a little impatient with him because he has to ask you all kinds of things and for all kinds of paperwork. But that's not him. That's the government, and it's all for your protection. So be patient. Now, here are the things that some people are afraid of. And I just want you to know that everybody has had problems, especially in the last few years. All families have suffered from some type of setback. So if you have a low credit score, don't worry about it. It's fixable. Nick is great at that. He's an expert at it. What if I file for bankruptcy? Don't worry about that either. We can fix that. Foreclosure, we can fix that. Student loan, there's programs for that. So everything that you're afraid of, you have to kind of put it in the back. And I get calls every day from people that they don't even want to tell me their credit score, but that's okay. They don't have to tell me. They can tell Nick. He's the only one that really needs to know. I don't need to know what your credit score is. But the first step is just telling us where you are right now, because we can make a plan. We can make a plan, a home ownership plan for you to get you in that house as soon as possible. When is the best time to buy a home? The best time to buy is as soon as you can, as soon as you're comfortable. Now, as far as the time of the year, the winter is a really good time to buy a home because sellers want to sell that home. If it's listed in the winter, they need to move. So you might be able to get a really good buy, and you don't have a lot of competition in the winter. Where should I buy a home? This is an important question because sometimes there's areas in the country where you can buy a home for 0% down, and Nick will go over that. How much house can I afford to buy? That's a discussion that you have with Nick because we want you to be comfortable with your mortgage payment. We don't want you to be house poor. Now, of course, when you first get into the house, maybe you're going to have to pay a little bit more than your rent was, but we still don't want you to be really, really strapped. How much down payment do I need? This is the most misunderstood part of buying a home. Sometimes you can get into a home for no down payment. Most of the time, you need some down payment, and Nick is going to go over those programs for you.
And yes, one thing I do want to elaborate on a little bit with this, Debbie, is when you're looking at rent, okay, buying a house will always be cheaper than renting. And the reason why I'm saying that is even if the purchase price or your payments are slightly higher, remember you have a tax deduction. You can take mortgage interest off. You can take your insurance off. There are things that you can write off which can put more money in your pocket. And you may even be able to consult your CPA and maybe to get less withholdings. And getting those
Yes.
less withholdings will put more money in your pocket as well.
Now, why should I buy a home instead of renting? Because you're building wealth. I'm going to say that a lot because that's the most important thing, is generational wealth. We want to have an asset that we can pass on to our family when we're not here anymore. Also, when you own a home, you have so much more freedom. If somebody in your family has a struggle and they need to come live with you, you don't have to ask your landlord. They can just live with you. You can have a dog. You can have 2 dogs. It gives you a lot of freedom. So and there's tons more reasons, but the main one is wealth. Here's a slide that tells us homeowners have a 40-time greater net worth, which means wealth, than renters. It's very, very hard to save money and create wealth when you're renting. You've got to do it when you're buying your house, because your mortgage payment is like a forced savings, and that equity in your house is growing. And equity is the difference between what you owe on the house and what the value of the house is now.
Yes, Deb, also your equity, regardless of the market, regardless of if home prices are up right now or down right now, your equity will always grow faster, okay, over a 10-year period of time than any 401k, IRA, stock market, anything like that. The equity in your home is the greatest, the fastest way to build net worth.
Yes, it is. Now, here's another thing, the increasing gap in family wealth. Renters, it's very, very, look how low their net worth is compared to a homeowner. And that statistic is just getting worse over time because the rents are skyrocketing. And like I say, if you're paying these high rents, it's very, very hard to save. So you've got to get into a home that you're buying, because you have to live somewhere. You have to pay to live somewhere. So you might as well pay yourself rather than pay your landlord. Don't make him wealthy, make yourself wealthy.
So what are the biggest challenges of home ownership? We went over for a little bit for a second. First is challenge credit. And number 2 is, where do I get the money or cash I need to close? So, and let's go over the credit score first. What if you have a low credit score? And with Fidelity Direct Mortgage, there's no such thing as bad credit. Credit scores are a snapshot in time. Most people don't understand how credit scores work. So a lot of, we hear it all the time. Well, I don't want to buy yet. I don't want to do this. I don't want to do that. I want to work on my credit. And a lot of people don't understand that working on your credit just isn't paying bills off or paying a collection off. You can literally pay a collection account off and your credit scores can drop. We can show you with our simulators what is going to be the most efficient way for you to increase your credit if it's challenged. So credit scores can improve, and we can show you how to do that in the most efficient way. Now, scores are different. There are different models to credit scores. For instance, let's say you go buy a car and they pull your credit, and that credit score might be a 600. Then if you go get a credit card, that score might be a 660 or 670. Mortgages, auto loans, credit cards, if you pull it on Credit Karma, they're all different versions, which means they all weigh debt differently depending on what type of financing you're looking for. we want to make sure that we are actually maximizing the credit models that are most important and acceptable to getting a mortgage. Now, there is a breakdown of how things are scored. The biggest thing is going to be payment history. If you pay the bills on time, that is going to make the greatest influence with you. Also, the amount owed. You can pay all your credit cards on time, and they can be all maxed out, and that's going to actually hurt your score. You want to try to keep your balances on your credit cards under 30% of the limits, if possible. New credit helps. Length of credit history. The longer that you have your credit history, the better that is going to score if you're paying it on time, and also your credit mix. Once again, going over credit repair. There are a lot of companies out there, a lot of lenders that do not know exactly what you need to do in order to get your scores to where they need to be to qualify. You know, some of you might have spoken to lenders in the past, your bank in the past, and they might have said, well, you know something, your scores are a little bit low right now. You don't qualify. Just come back to us when they're, when they're higher. That really doesn't help you that much. You can actually, if you pulled your credit on Credit Karma, and then you might have a BG&E electric bill, or a Comcast bill that wasn't paid, or maybe you have a charged off car. Maybe you were in a car accident and your insurance didn't pay it off completely. Those things can affect your credit as well. We do not judge here. Bad things happen to good people, and we will work with you. We do not turn anybody down here. We will work with you until you get keys to a house. Debbie, you want to talk about one of those success stories?
Oh, yes, we have many, many success stories, but this is one of my favorites. I had a booth at our local county fair where I was giving out information on our real estate programs. And a fellow came up to me. He had a son with him. He was about 12. And the guy was distraught. I mean, he had tears in his eyes. And he said, I need help. I need somebody to help me. Well, I didn't know what was wrong with him. And I said, what can I do? And he said, I just filed for bankruptcy this week, and I'm afraid I'm never going to be able to own a home. And I'm a single dad, and I need to provide for my son. And he started crying. And I said, well, listen, calm down. I said, we can talk through this. Let's talk through this. I said, are you currently working? And he said, yeah, he had a good job and he was really proud of his job. I said, okay, then what was the bankruptcy for? And it was for his legal fees, to try to get his child support and all that stuff, which happens so much. So anyway, one of Nick's loan officers was with me at the fair, and he talked to this guy. And they were on the phone later that night for about an hour. Now, at the time, it took 2 years for you to get through bankruptcy. And in that 2 years, the loan officer would call him once a week and they would talk about his score. And he was so excited. He got that score so high. We settled his house 2 years and 2 days after he filed for bankruptcy. So now I have to ask Nick, aren't there programs now that you don't have to wait 2 years?
Absolutely. And to go over that a little bit, I wanna add something to that. Some of the programs that we have now, you can be 1 day out of foreclosure, 1 day out of bankruptcy, and still get financing for a home. So things are a little bit different now. We have developed programs that are much more aggressive than the standard, the industry standard. And I will be happy to go over anything with any type of situation or any hurdles with anybody, of course, off this presentation if they need to. I actually want to add one quick success story. I had a young lady give me a call. It was about 45 days ago. She was interested in renting to own. We do have rent to own programs I'll get into a little bit later. Well, she was turned down by 3 banks to purchase, as she thought her only avenue was the rent to She settled on a property she purchased last week. So she's very, very happy, and she did it with actually less money coming out of her pocket than she would have actually renting. So we'll get into that in a little bit more. So one of the biggest things, the biggest issue, the biggest step we have to take is doing a mortgage application. Details matter, accuracy matters. There's nothing you can hide with the technology out there. If you had a bankruptcy, or if you owe some child support, anything like that that might not be on your credit report, it's going to get verified through the systems. So the more we know up front before an underwriter gets their hand on your file, the better. Because if there's some issues that you have, we can address them ahead of time, make your file look much, much stronger in order to get that a nice, clean underwriting approval. Now, we work very quickly at Fidelity. We can get a purchase done in less than 21 days, which is very, very fast. But we can only work as fast as you do. So if we ask you, hey, I need some pay stubs, I need a bank statement, the faster you respond, the faster we can move through the process to hit those closing dates. And try to get things over to me the first time correctly, which means, if I ask for tax returns, I ask for a bank statement, not a picture of a piece of a bank statement. Try to send everything in full if you can. Now, the standard loan documentation needed is pretty simple. If you're a W-2 employee, we will need 30 days of pay stubs, the last 2 years W-2s. And of course, your assets, bank statements, 401k statement, where you have money coming for down payment, whether you have it in the bank, whether you have it in a 401k, whether we need to find you some type of, down payment assistance, or whether you're getting a gift or a gift from a family member. Self-employed borrowers are a little bit different. We'll need 2 years of personal and business tax returns and a year-to-date profit and loss. That profit and loss statement does not have to be audited by a CPA. I can assist you with that if you need it. And some of the loans out there, and the most popular is an FHA loan. What is an FHA loan? FHA loan is a loan that is guaranteed by the Federal Housing Administration. Lenders like banks, credit unions issue loans, and FHA provides the backing. So if you don't repay your loan, FHA will pay the lender instead. Now, what are the benefits of FHA loans? You need a lower down payment, more flexible credit requirements, the qualifying ratios. And if anybody does not know what a qualifying ratios, that is your debt to income ratio. For instance, if you have $1,000, if you make $1,000 a month, and let's say your mortgage payment is $400 a month, that front end debt ratio would be 40%. Let's say you have $400 a month mortgage payment and an additional $200 a month in monthly bills and debt. That back end debt ratio would be 60%. So your front end and back end debt ratios can be much higher than a normal conventional loan. Also, with FHA is flexible with most grants. You can give gift funds. And a lot of times FHA rates, believe it or not, can be lower than conventional rates. And the FHA loan limits are actually pretty reasonable. And if you're in the DC area, you can be close to $1 million. Baltimore area, that actually went up to over $700,000 for 2023. So there's plenty of flexibility getting an FHA loan. Now, there's 2 other loans out there that you can get 0% down. If you're a veteran, you can qualify for 0% down. We just have to verify your eligibility. The other loan, which is overlooked a lot, is the United States Department of Agriculture loan. Now, when somebody hears United States Department of Agriculture, they think, I do not want to have a farm. I don't want goats. I don't want horses. It's not like that. There are certain areas in every county, and it could be in a suburban part of a county, or you can get townhouses. You can be in a development, and those areas still qualify for USDA financing. So we can look together if that's something that you're interested in looking. We can look at some of those areas that are USDA eligible, and we can see if you can qualify for those. How much down payment is required? Now, the down payment on a home is based on the program that we do. Now, if you're looking at an FHA loan, it could be 3.5%. But remember, that is 3.5% of just the sale price. For instance, if you're buying a $100,000 loan, I know that's not realistic right now, but hypothetically, 3.5% of $100,000 is $3,500. That is the down payment on the house itself. There are closing costs involved. There's escrows, recordation taxes, transfer taxes, title fees that can add up to another 4 to 5% of the sale price of the house. This is where, if you have a good real estate agent that knows the market and knows the area that you live, can possibly negotiate, especially in this market that we're in now, to have some of those closing costs paid by the seller for you. Or, if you qualify for a grant, we can work with getting those things paid for you as well. Now, where can you get this other money? There are different grants and money available in cities and counties, state, local finance agencies. Some employers, okay, will provide money for down payment assistance, and some nonprofits. We know most of these. We don't expect you to know the ins and outs and the guidelines for these programs. Once we get the application, look at your full picture, we will be able to tell you what you do and do not qualify for, and we will work with the programs that you do qualify for in order to get you into a property for as little money as possible, hopefully zero. So homeownership is within reach. If you don't have great credit or fair credit, we can work with you with that. If you have stable employment, that helps. If you want to buy a home today and you make less than $168,000 as a family, or $206,000 in the DC area, we do have a program called Within Reach program, where you can get in too little or no money down. This is one of a very, very strong programs that we have. Now, first-time home buyers with the Within Reach program, you can see, in certain areas, let's say the PG County, DC area, for instance, average rent payment in those areas is about $2,500. Okay, when you're looking at the Within Reach program, or really almost any program when you're going to buy, you actually can get in for much less, not to mention the tax benefit. So your overall monthly outlay can be very, very less. For instance, it's just not saving a little bit of money on the payment itself. It's the money back in your pocket, because it puts you in a different tax bracket as well, as far as your withholdings. So you can actually give yourself a raise monthly by buying a property. How hard is the process? If you're working with an experienced lender, hopefully you'll give us a chance, and a realtor. We come up with a plan together. Everybody's different. Okay, everybody's got specific needs. So we want to come up with a plan that is attainable in the time frame that you need. Always get pre-approved first. You do not want to put an offer in on a property that you're not approved for. You could lose your security deposit, and it could be a big mess. So you want to know what you're pre-approved for. You want to know the total that you're pre-approved for, and we also want to know what you're comfortable with, and then we can work within those parameters. Communication is key. If there's a change in employment, let us know right away. Be accurate with the information. Respond as quickly as possible. And we don't work bankers' hours. So if you need me anyway, 2 o'clock in the morning, 11 o'clock at night, I'm available to take calls, answer questions, and emails.
Not
So,
me,
Debbie,
Nick.
when is the
Not
best
me.
time to buy?
It's not me. I'm not a 2 in the morning person.
No, you
So.
call me. I'm always awake. So, Deb, when is the best time to buy a house?
The best time is now. The best
Now.
time is as soon as you can. Now means no opportunity wasted. So we get that home buyer plan for you. We look at where you are right now. We look at what you need to do. We work with you every step of the way. And we get you there as soon as we can so you can start accumulating that wealth. So,
like Debbie said, as soon as you can afford it. Now, here's something a little bit. Here's a little tidbit for this market. When interest rates go down, everybody knows the sale prices go up. Everybody knows how crazy it was anywhere between 8 and 24 months ago. Rates were very, very low, and people were offering $40,000, $50,000, $60,000, $70,000 over asking price for a house. What does that do? What happens when you have a low interest rate and extremely high sales price? It's not really much different than having a lower sales price and a higher interest rate right now. The difference is if you buy at a lower sale price right now and you can afford the payment with the interest rate, and we'll make sure you can afford that. Okay, what will happen is once the interest rates go back down, you're going to be able to refinance with the lower balance you have right now. You're not going to be caught into that sale price spike. So that's really, really something to consider. Also, what our company is doing right now for anybody that buys to make things a little bit easier is we're offering a free refinance once the rates get better. And once you get pre-qualified, you go under contract and settle, you will get a voucher for that free refinance once the market changes. Hopefully it's sooner than later, but if it's not, you're going to be protected. So does anybody have any questions in the chat right now? Let's see. All right, nobody has anything in the chat. All right, we'll keep going. So there is a new way to buy a home in actually 2022 going into 2023. It's called Trio. Now, Trio is a rent-to-own program where it bridges the gap between renting and owning. So with the Trio program, you will go actually on the mortgage with an investor. And once you're ready to actually own that house on your own, we refinance the investor off for you. This program is one that we do. It's backed by FHA, and it's actually backed by the Choctaw Indian hedge fund or tribe. Now, Link, this is a very, very unique program. If you're renting today, you do not have the cash to buy a house today, or you are turned down for a mortgage. And this is where we're talking about if you're a day out of foreclosure, a day out of bankruptcy, this program may be your way of owning a house again relatively quickly. So this program, is for first-time home buyers. If you're self-employed, okay, and you're not showing all your income. If you're 1099, you're relocating, you have a lot of student loan debt, college graduates. And even if you're a DACA or undocumented citizen right now, and you have credit issues, you can literally get into a property for less than 5% down. So what we'll need is we'll need pretty much the same thing that we would need with any other loan. Now, if you have a second job less than 2 years, FHA and a conventional loan, if you have two jobs, you have to have both jobs for 2 years in order to use it. If you just got another job, we'll be able to use that. We'll be able to use overtime, bonus, and commission income. So this program here is very, very lenient. So even if you have a 0 credit score, okay, you can buy a house with this program. So you can contact us. We can go over this program a little bit more in detail with you. Trio is the little brother of Link. This is a similar type of program. This program here, the investor actually buys the house for you, and you rent it from the investor. You rent it back from the investor for up to 3 years until you're ready to buy it. So this is another program that can get you into a house that you are building equity in. Now, the sale price of the house is set ahead of time. So let's say, excuse me, 3 years from now, the property value actually goes up substantially. That doesn't matter. That equity is yours. So this is another program that we can talk about if this suits your needs. So Deb, if you're interested in a consultation, you can call Debbie and her team at Coldwell Banker. And
yes, we go over everything pretty quickly here because there's a lot to learn. You probably have questions, and we just want you to know that we are dedicated to your home ownership, your path to home ownership, and we can make a plan for you. And Thelma put some comments in. Thelma, please call Nick tomorrow and discuss your situation with him, and let's see how we can help you. And anybody that wants to give me a call or Nick a call, our information is here, or you could put your information in the chat box and one of us will reach out to you. How about that?
yes, and Shakima, I see that you have to move by January 3rd. If there wasn't a holiday and we could actually find you a property right away, I would say there would be a possibility to push this through. I would say the faster we can get an application from you, we can see what we can do. So definitely reach out to us, reach out to Debbie, and see what your status is right now, and then I can get you a link for an application to see how quickly we can move for you.
Okay, and Nick is the one that you need to get pre-approved. He pre-approves you, and then he tells me how much you can afford, how much is comfortable, and then one of my agents will go out with you and we'll start looking at houses. So,
Yes,
and if you need to rent, then that's what you do, but we can usually find some pretty good options. So Nick, can you put your information back up on the screen, or?
Let me find, I think it was on one of the first pages, wasn't it?
Oh, I think so.
Well, let me see here. Let's see where it is. It was somewhere. There it is right there. Yes, it's nick.burns@fdmhome.com. And then you see my office number, my cell number. Also write down that EFAX number as well.
Very light, Nick.
It's very hard to read, Nick. Can you read it out loud, the cell number?
Yeah. The cell number, it's 717-521-6863.
Yeah, we're going to have to redo that slide. We'll redo another slide.
Yeah, Brett did it.
Yeah.
And,
So,
and the email is nick.burns, BURNS, @fdmhome.com.
okay. Any other questions before we wrap it up? Well, thanks everybody for coming.
Regina, go ahead. Regina, go ahead and
yeah, I have another question. This program for people who have vouchers.
I'm sorry, I didn't hear you.
Is this program for people who have vouchers?
With vouchers in some count, well, if you're looking to buy, it's going to depend on if those vouchers are good. where you're getting the vouchers will actually
The
transfer them
voucher
to buy a
belongs to
house.
me. It belongs to me. It doesn't belong to the unit. It's mine.
Right.
It belongs to me, not to the unit.
Okay, well, that's something that's something that we can talk about. Because if you're receiving vouchers, there are some counties and states that will allow vouchers to be transferred over to purchase a house and for payment for a house, and there's some states and counties that will not allow that. So we'll have to.
And I believe Howard County is one that will allow.
All right. Let's
Just call Nick and he'll go over your individual situations with you.
Okay.
yeah, go ahead and shoot me an email. And then I'll get some I'll do some research on that and see what we can do for you.
All right. Thank you very much.
No problem. Are there any other questions? Let's see what we have here. And yes, you can call me after the Zoom meeting. I'm fine with that.
Okay, all right, good.
All right.
All right, everyone. If you have any questions, give us a call. Thank you for spending a few minutes over time. Look forward to talking to you soon.